XRP just crashed 40%. It's from $3.65 to $2. Some are panicking, others are loading up. Standard Chartered says it could hit $12.50 by 2028. Some analysts are calling for $100. Is this the opportunity of a lifetime or a trap for the impatient? Welcome to Wall Street Lens. Let me give you the current picture. XRP is the world's fourth largest cryptocurrency, to still up 5% for 2025. That sounds okay, until you realize it was up much more. Earlier this year, XRP hit $3.65. Today, it trades around $2. That is a 40% decline from the 52-week high. Short-term traders are heading for the exits. Momentum has reversed. Fear is setting in. But long-term investors are seeing something different. They see a 40% discount, con, on an asset with major catalysts ahead. Let me explain why. The biggest catalyst, new spot XRP ETFs. They just launched. And they change everything. For the first time, big institutional investors have a quick, easy way to get access to XRP without holding the token directly, without dealing with crypto exchanges. Just buy an ETF. Simple. The numbers are already impressive. Nearly $1 billion has flowed into XRP through these new ETFs. Investors are diversifying beyond Bitcoin and Ethereum. XRP is becoming part of institutional portfolios. This is exactly what happened with Bitcoin. After the Bitcoin ETFs launched, capital flooded in. Price followed. Here is why ETF flows matter. When institutions buy ETFs, the ETF provider must buy actual XRP to back those shares. More demand for the underlying asset means upward pressure on price. This is not speculation. This is mechanics, supply and demand. Now, let us talk about price targets. Some analysts are wildly bullish. Price targets above $10 are common. Some go as high as $100. At today's prices, around $2. That would be a 5-fold to 50-fold return. Sounds incredible, right? But let us look at what serious institutions say. Standard Chartered, one of the world's largest banks. They published an XRP price target to $12.50 by the end of 2028. That is not a crypto influencer. That is a major global bank putting their reputation on the line with a specific price target and a specific timeline. Let me do the math for you. If you buy XRP at $2 today and it reaches $12.50 by 2028, that is a 6x return in about 3 years, 500% gain. If it reaches $10, that is 5x if somehow it reaches 100. That is 50x. The upside scenarios are significant. But I have to give you the other side. Because this is Wall Street Lens, we see the market clearly, including the risks. XRP has disappointed investors before. The hype has not always delivered. The RippleSec lawsuit dragged on for years. Price stagnated while other cryptos rallied. Past performance does not guarantee future results. Here are the risks you need to consider. Risk 1. Regulatory uncertainty. Yes, Ripple won key battles against the SEC, but the regulatory landscape can change. New rules could impact XRP differently. Risk 2. Competition. Ripple's cross-border payment technology faces competitors. SWIFT is upgrading. Central bank digital currencies are coming. XRP's use case could be disrupted. Risk 3. Concentration. Ripple, the company, holds a large amount of XRP. They release tokens periodically. This creates selling pressure. Not all crypto projects have this dynamic. Risk 4. Volatility. 40% drops are not rare for XRP. They are normal. If you cannot stomach that volatility, this is not the investment for you. Here is my framework for thinking about XRP. This is a speculative, asymmetric bet. What does that mean? Asymmetric means the upside is much larger than the downside. If XRP goes to 0, you lose 1x. If XRP goes to $12, you make 6x. If XRP goes to $50, you make 25x. The math favors small positions in these scenarios. How to approach this intelligently? Position sizing matters. Do not bet the farm on XRP. A small allocation, 1 to 5% of your crypto portfolio, gives you exposure to the upside, without devastating your wealth if it fails. This is how professional investors think. Small bets with big potential payoffs. Timing matters too. Buying after a 40% crash is generally better than buying at all-time highs. You are getting a discount. That does not mean it cannot fall further, but it does mean your entry point is better than those who bought at $365. Here is the bottom line. XRP at $2 is interesting. New ETFs are bringing institutional money. Standard Chartered sees $12.50 by 2028. The upside scenarios are compelling, but the risks are real. Past hype has disappointed. Competition exists. Volatility is extreme. Will your future self thank you for buying XRP at $2? Maybe, if the bull case plays out, but only if you size the position correctly, and only if you can hold through the volatility. This is not financial advice. This is a framework for thinking. What is your take on XRP at these levels? Buying, loading up, or staying away? Drop your strategy below. Subscribe for more balanced crypto analysis. Wall Street Lens. See the market clearly. See you in the next one.